Welcome to The Arena, a show about mortgage, real estate, and the boots on the ground making it happen every day. With this market being a battle, we want to bring on people that are going to help you fight and win that battle. Today, I'm really excited. I have two people here I've been working with a very long time, VA experts, military experts in the region, and someone I think that you're going to be able to learn a lot from today. Welcome Lizzie Biddle and Mike Wu.
Thanks for having us.
Thanks, Lizzie and Mike are the Biddle Group, and right? Did I get that right?
Biddle Real Estate Group.
Biddle Real Estate Group. I see. I want to make sure I was perfect. And no, I want to have you guys on today because you guys specialize in military buyers.
Yep.
Now, obviously, you do all real estate. Anybody who wants to sell or buy a house, I'm sure you're not going to turn them away. No, you're not military.
Yeah.
But I just thought it was so interesting to have you guys on today because there's so much of a stigma, misconceptions, people just not really understanding VA, what that means, and really who qualifies. Is it a good loan? Is it a bad loan? Listing agents not accepting certain VA buyers because they just again think it's not as strong of an offer, strong as a buyer because of the down payment. So I really wanted to get into it today and just really educate everybody in why is it you're going to want to go VA and what you guys deal with every day with your military buyers.
I mean, the biggest thing that I always say about VA, I feel like there's such a lack of education. So many agents, and maybe this was the case back in the day, the misconception is that the VA appraiser is going to go to the property and is just going to write a laundry list of things like you need to repair this and this and this and this. And unlike a home inspection where the buyer makes a request of the seller, the appraiser making that request, it's a non-negotiable item. It has to get done or the loan will not be funded. The VA loan, in my opinion, is the best out of all the loan products. You don't have to make a down payment. Right. However, a down payment, some clients choose to do it. However, it doesn't really impact how it's perceived because whether that VA buyer is putting 50% down or nothing at all, they still are, the VA loan is governed by that VA mandatory escape clause, basically a VA addendum which states that the property has to appraise for the sales price or that buyer cannot be held accountable. There is no more negotiation. Under that clause, that buyer can walk. So that's kind of the thing that protects the buyer, but at the same time, it's what kind of hinders the buyer because they then have to go to extenuating circumstances to try to get their offer accepted.
Well, let me ask you a question. So there's a lot of protections in there for the buyer, but when you're structuring an offer for a VA buyer, they're going to use the VA loan. What are you doing in there to kind of bridge the gap between the concerns of a seller and the listing agent and the reality of the loan itself and the buyer?
I mean, that VA buyer, more often than not, I mean, yes, you have some retired veterans, but a lot of them are active duty. So that means that they're contractually obligated to that, whether that's 3, 4, 6 years, they're not going to lose their financing. And that's the biggest thing in this climate in which the last 3, 4 years, there's a lot of uncertainty with employment. And military active duty members, they don't have that. Like you would have to really mess up to no longer be employed by the military essentially. So it's one of the safest as far as employment goes. And it's our experience, we haven't really had a lot of appraisers call for repairs. I mean, we've done about 100 of them, if not more. Usually what are the things that you would say come up often, Mike? As far as, I mean, it's usually minor stuff.
It's very minor stuff. I mean, with VA appraisers calling out pretty much the same thing as a FHA appraiser will call out.
Concerns.
Handrails, chip paint for the concern of lead-based paint.
Right, exactly.
Right.
And really that's about it. And those typically are things that for a home to obtain a certificate of occupancy wouldn't typically need to be addressed anyway. Things like handrails. If it's missing handrails, missing spindles, safety concerns, a township inspector would call that out as well. So the home, from the seller's perspective, they still have to do those repairs.
Of course. Right. Well, I have to say this because I get fired up when I hear certain agents aren't accepting VA buyers. Look, it's the number one mortgage in the world, in my opinion.
The best interest rate too.
It's you get the best. You get a really great interest rate below market on a conventional loan. You get the option of going 0% down. No PMI, private mortgage insurance, which is required on any other loan if you're not putting 20% down. And on top of that, you get protections built in. Oh, and by the way, if the rates drop at least by 0.5%, which is the rule, you could refinance with little cost. And it's called a streamline refinance. So you're always guaranteed to have the best rate. And you don't need to do an appraisal. You don't need to do income verification again. It really is an amazing mortgage. So when I see listing agents not accepting them because of just a lack of understanding and education, it really does get me fired up.
And they shouldn't have to. Like, I can't say how many times I text a listing agent or I call a listing agent and say, hey, I have a very well qualified VA buyer. A lot of people think VA buyers are broke or they have bad credit, and that's not the case. A lot of VA buyers have substantial reserves. A lot of high-ranking commanding officers have substantial cash reserves, and they're not all broke. I don't know where this misconception comes from.
Well, it's because of the zero down.
I think that's what it is.
And I would argue, well, if you could get a low rate, have no penalty for putting zero down.
Why would you?
Because again,
Right.
why are people putting 20% down or 10%? Because they want reduced or no PMI.
Right.
So if you have zero PMI with zero down, why wouldn't you take that option? Keep your money in your retirement. Keep your money in your investments. Or let's talk about how you guys want to structure your offers. Because if all of a sudden you have access, you go zero down and you have all this money now you can play with. Let's talk about in this environment, how are you guys structuring offers to win for your buyers?
And that's something that we were talking about yesterday or Saturday. Not all real estate agents are created equally. I can't tell you,
don't
how many.
say, really?
I can't tell you how many offers. It's just literally see offer and pre-approval attached. You're not outlining, like I have 20 offers on this house and you're just literally just sending me a PDF with a pre-approval. Like, so many agents don't bother to gloss out and highlight all the meat of the offer. When we submit offers, we highlight what the offer is, any kind of appraisal gap, any like the earnest money deposit, closing, any kind of specifications with the home inspection. We highlight all of the main points.
Right, the main points.
Mike,
It makes it
points.
easy.
Mike, when you're putting an offer in, because I know that you work with a lot of buyers, and again, you're going to bat for them and having to get creative. What would you say are the steps of making an offer that you're finding that are winning over other offers now?
So a lot of times clients find us through Facebook, social media, or just the business page, whether it's Instagram or, like I said, Facebook. They'll usually message me directly, obviously because of my military affiliation. And I let them know, hey, like, is there a date or a time that works for you so we can have like a buyer's consultation? And then sometimes I let them know it could be myself to do it, it could be Mike to do it. Either way, you're basically getting two realtors for one because we work in tandem. We always we work together to make sure that if he's showing houses, I can show the client the property that they want to see. Or if I am, at a listing appointment, then he's going to be the one to show because it's so time sensitive. In this market, we're back fully sprung. The spring market is sprung.
These houses are gone in a day.
Literally a weekend. Thursday, and by Sunday, Monday, we already have like 20 plus offers. So time is of the essence. So we work together to make sure that the moment that buyer wants to see that house, one of us is going to be able to show it.
Divide and conquer.
Divide and conquer,
Yes.
right? And then the way that when we were doing the buyer's consultation, we pretty much laid everything out ahead of time. Part of it is understanding what the buyer's needs are. Give them a quick synopsis of what the current market situation is like. The fact that there are multiple offers. We are now back to the full implementation of appraisal gaps, multiple offer situations, listing agents calling for highest and best, et cetera, and then kind of describing what our process is and describing what the buying process from beginning
From offer to
end,
closing.
from
right.
offer to closing, all the various steps, what the off ramps are during the entire process, and what their obligations are as buyers, as well as the financial commitments, the outlays, out-of-pocket expenses that they should expect to pay.
Now, I
Inspection
know-
costs.
process.
I know after working with you guys for so long and us being in communication throughout this process, it became pretty clear that knowing the numbers, knowing all the options ahead of time before you sit down for this consultation was so important. And I know that's why we came up with this process called a pre-approval blueprint. And what happens is when you get pre-approved, I know there's so many agencies out there, USAAs, there's
Veterans United,
Navy Fed.
Navy Fed.
Look, I know they're advocates for the military, but they're just banks, and
They're just banks. Like everybody can do a VA loan. Bank of America can do a VA loan. Wells Fargo can do a VA loan. But everybody gets caught up on USAA, Navy Fed, Veterans United because they have veteran. They think that it's their product, where any financial institution can do a VA loan.
And I would argue it's really the time spent one-on-one with the military family, the buyer, and coming up with every angle that we possibly can to understand all the options.
Yeah.
So knowing all the financials, how much money out of pocket, what's your payment going to be? Look, you might be able to qualify for a nice amount, crazy amount, but doesn't mean that that's what that buyer wants to spend every month.
Absolutely.
And now all of a sudden they're house poor, but they didn't really understand that with those other banks that just weren't taking the time, or as an advisor, explaining to them, okay, here's your max, but to kind of be in that sweet spot where you want to be with your budget, you're going to want to be around here. So anyway, knowing all those numbers and having that blueprint, that game plan together, then being able to hand it off to you guys and them, then take it from there and do that consultation. I know that that's been a key to success. And then you take it from here, but I know structuring your offer has been really important from that point.
Right. So this majority of the offers, couple of key components. One, obviously, is the offer price, right? In this market, the highest offer price typically wins. Not always, but it gets the seller's attention.
Right.
Then the determining factors are really the terms, meaning how much earnest money deposits are you putting down? There's no minimum legally, but we always recommend somewhere between 1% to 3%.
And the higher the earnest money, the more serious that buyer presents themselves.
Right. Essentially, to the sellers, it shows they have more skin in the game.
Yes.
Right. So compares, a
somebody
buyer
putting down 1,000 or 3,000 versus somebody putting 10,000. Like, wow, look, I'm putting 10,000 deposit. I'm serious. I want this house.
And just to be clear, that deposit gets credited back at
that
closing,
goes towards their own closing cost, especially with VA buyers. If there's no down payment, that earnest money deposit just goes towards their own closing cost. It's their money at the end of the day.
And we've had buyers that I know get money back.
They get money back, because they ask for seller concessions. So the seller basically pays their closing costs, and that earnest money, they get it back at closing.
Yeah.
Right.
So I know, and that's important. I know, again, with putting in this offer, Mike, you brought up something interesting. The highest offer doesn't always get accepted. Why do you think that is?
Terms.
It has to be with the terms. The terms have to meet the seller's needs.
Right.
Right. Yes, an offer that is $50,000 over asking sounds great on paper, but at the end of the day, if there's nothing behind it, i.e., an appraisal gap, to bridge the difference between what the house will appraise at versus contract price, there's no guarantee to the seller that they're going to get the number they thought they were going to get. Versus an offer coming in says, here's $50,000 over appraisal, but we're willing to cover 30,000 of it. Or an offer that's $30,000 over appraisal, and the buyer saying, we're going to cover the entire gap.
Now I want to talk about appraisals for a second, because I think that is the single biggest deterrent for a listing
100%.
agent accepting a VA buyer.
Yes, without a doubt.
The perception is that these VA appraisers are going to come in, not care, undervalue the property, and they're going to cause a problem for them and waste a lot of time. I have to stop and say, look, I don't want to, we don't have to talk numbers here, but I'm going to tell you that the last we checked, my team here at Maximus Mortgage Advisors was one of the largest VA groups, lenders in the region. We do dozens and dozens and dozens of VA buyers, many of which are with you guys. Mm-hmm. And I'm going to tell you that we rarely have a problem.
We really don't. It's been a while since we have a Tidewater.
And by the way, when we were having problems, everybody was having problems, because when the market is taking off, the problem is, how do you get a value with comps? And if you don't have the comparable properties, the comps to judge that value and get to that point where we need to be, that's a problem for everybody. But we don't have that problem now.
The appraisal is the appraisal, whether you're conventional, FHA, VA, at the end of the day. That's all it comes down to.
Well, and also I want to say that with appraisals, with normal appraisers, they have to be bound by FHA guidelines or conventional guidelines, and they're also worried about the lender themselves that are hiring the management company that ultimately hires them. So they're trying not to get blacklisted by having too much of an adjustment or whatever it might be. VA appraisers work for the VA.
Yes.
They don't work for the lender. They don't care. They don't work for a management company. They work for the VA. So they're going to go off of the guidelines of the VA, which are more relaxed than conventional or FHA guidelines. So I want to just end that stigma and say that more times than not, you're going to be okay with a VA appraiser, and that value is going to come in. However, let's talk about Tidewater. So I just wanted to go into, Lizzie, I know you're an expert at Tidewater at this point. So what is Tidewater?
So contrary to what a lot of buyers think, it doesn't mean that the house took on water and it's flooded. Tidewater is just a term that VA appraisers utilize when the property the appraisal comes in lower than what you're under contract for. That's really what Tidewater is. It's a 48-hour period in which they allow the realtors to provide comps, comparative properties, to justify that contract sales price. Sometimes the appraiser will take those into consideration and we can get the value raised, maybe even to the contract sales price, so that buyer doesn't have to come up with any cash if they did offer an appraisal gap. But sometimes it doesn't. So it really depends, but it's a opportunity to kind of fight that appraisal that you don't get with any other of the loans.
And that's different too, because they're issuing this before the appraisal's released.
Right.
Where with any other loan, you're not finding out until the appraisal's already in.
Like, and it's done for, like, that's it.
It's done. VA is done. That's what I love about the VA. Is the really the only product out there that gives the buyers and the agents a fighting chance at correcting a potentially incorrectly done, I don't want to say incorrectly done, but
sometimes they are
undervalued appraisal,
Yeah.
right? If we're pulling in the more recent comps, we have the opportunity to do that. In case in point, we had one a while back. To Lizzie's point, we haven't had to do Tidewater in quite a while.
Yeah.
But there was one case that the appraiser did not pull in the correct comps. They didn't pull in the most recent sales. We had the opportunity to supply those comps. In that particular case, our buyers were under a time crunch and they decided to just move away to another property. But I don't know any other product out there.
There isn't.
That allows you to do that.
Yeah, it's definitely giving you the biggest opportunity for success when you're buying. There's a lot of tools that you guys can use, especially going zero down. And again, if the listing agent says, I'm a little worried, I'm not gonna lie, we're asking for, we listed it at 350, we're now at 400,000 after a bidding war, okay? I get it that you're probably worried. You listed it at 350 because you thought you can get 350 and the comps may not support 400,000, right?
Yep.
So at that point, zero down, maybe that buyer has the money in an account, which we determine with our blueprint. We say, look, you have this much in reserve to use towards any appraisal gap. And what you're saying, Mike, is now you're going to be able to put that offer in, guaranteeing at least a X number to bridge that.
It's an insurance bridge. I always use that analogy. Think of it as a bridge. The appraisal gap is a bridge between the possible low appraisal and the contract sales price. So, like, hypothetically, if you offer a 20,000 appraisal gap, and let's say the property underappraises by 10, you're not bringing 20, you're only bringing 10, because it's basically the bridge to get you to what was basically offered. It's an insurance policy for the seller is really what it comes down to.
So we talked about comps, and obviously that's all determined by location. When you're military, and by the way, Lizzie, do you want to talk about your service? I don't think a lot of people realize, that you're a veteran.
Yeah, I did 4 years in the Air Force, active duty, and that's why I'm so passionate about the military community. My husband's still active duty, so we live it. We experience having our offers rejected over and over and over again until we finally got our house. But yeah, that's why I'm so passionate about the VA loan, about the military community, and that's where my heart lies at the end of the day.
Well, and I have to say too, watching you running a successful real estate team, handling everything. You have how many kids?
Two little boys.
2 little boys, and your husband, he gets deployed every once in a while. And so, and what branch is he in again?
Air Force.
So he's in the Air Force. So he'll get deployed. I watch you live
my kids
every day.
My kids are always with me on showings or inspections, because at the end of the day, like, my clients are my priority. Obviously, if my kids are in school or whatnot, but I always put my clients first, and my kids are used to it. You know, they're like, "Are we going to go see a house, or are we going to a home inspection?"
Well, but also that's why it was so great to see Mike come on board too.
Oh, yes.
You know, look, I have to just say, watching Lizzie and I've been working together probably, I guess, since you got started.
4 or 5 years, yeah.
And it's been a wonderful 4 or 5 years.
Yeah.
Not stressful at all.
No.
Oh yeah.
The markets have been totally
So
normal.
chillin'.
So yeah.
It's
But I have to say, and anybody watching that, you know, you're wondering, well, what agent do I use? And again, don't have to be military,
Yeah.
but just watching, you as a military mom, wife, and then ex-military yourself, and just being able to have something in common with all these other military families that are PCSing in.
I've been there, yeah.
You feel their pain.
I've been
they
there.
Don't know the area.
I didn't know the area. When
Yeah.
we got here, we actually lived on base housing our first year here because we came from overseas. I was not very happy during that time, and I was like, we just need to buy a house. And you were my lender, and that's why I recommend you guys all the time. It was such a great experience.
Well, and so let's talk about, you have military coming in, they're living on base, or they just, again, don't know the area. I think the tendency probably is to just stay as close to base as possible. So what do you guys talk about when you're discussing location?
We ask about the commute time. Like, that's one of the first questions is, we set the expectation. JBMDL is in a very rural area. It's acres and acres of farmland surrounding it. So that's not everybody's, some people love it. Some people don't want to be near their neighbors. They want larger lots, and that would be great for those individuals. But then we have other clients that they want to be near grocery stores and restaurants and shopping centers. So, those are the buyers that are looking in Medford, Marlton, Mount Laurel, Cherry Hill. So that's something that we establish in the buyer's consultation. We kind of like get a feel for what they're looking for. Are they comfortable with a 30, 45-minute commute time, or is 20 minutes like their absolute max? Because all of that factors in.
And then, well, Mike, when you're discussing with them, what kind of town highlights are you going over? Because again, there's so many towns I know in the New Jersey, South Jersey area, Central Jersey. What are your big talking points that you bring up with your buyers?
With my buyers, one of the big questions I always ask is, are they comfortable with well and septic? Because to Lizzie's point,
could that be a problem?
Not really, actually. Where the base is located, the surrounding towns, because it is rural, agricultural, concentrated, most of the homes are well and septic. There are small pockets where it's public water and sewer. If a buyer is adamant about having public water and sewer, then they are limited to basically areas closer to the Delaware water. Right. The older towns, the more developed areas where they will have the public services that they're looking for, as well as the short drives to the community, to the amenities that they're looking for.
Right.
If they're looking for privacy, they have to be comfortable with well and septic. Two things that to a buyer could potentially be very scary, what they're not used to.
It's mostly lack of knowledge, I feel like.
Right, and really from a day-to-day use perspective, they're not going to know the difference. They're not going to feel the difference between well water and public water.
Yeah.
I have well and septic.
I've
Honestly,
never had it.
I've never touched my well in the 5 years that I've had it. Septic, minimal maintenance, as long as just using some common sense actually. Things that you wouldn't do when you're on public sewer.
Flushable wipes,
Shouldn't do it.
feminine products.
Shouldn't do it with on septic either. Mm-hmm. So, and the only really other point kind of need to keep in mind with septic is it is an enclosed biological system.
Yeah.
It's on site. Don't use anything that is antibacterial. I'm not saying 100% of the time. If you need to clean with bleach, go ahead. But don't do it every single week. Do it once a month.
Yeah, I moved into a house a few years ago. First time I ever had septic. It's really been no difference.
Yeah.
We even have, you can have a garbage disposal and all that. It's fine. But we pumped it, I think, for the first time, a few months ago. Yeah. Really not a big deal. But Mike, I think that's such a great thing that people don't think about. It's like, okay, where do you want to move? Do you want well or septic? Let's have a conversation, because again, the tendency is if you're moving on base, you're going to want to stay right around base. But if you go a little bit further away, then you might have other opportunities. Do you like certain towns and you want to have that town feel? I mean, Mount Laurel, Marlton, Haddonfield, Collings. There's so many other towns out there, and if you just want a little bit more of a commute, you have a lot more options. And in these days, with the market being so tight, so few listings out there, the more options I'm sure they give you as their agents, the more you're going to be able to advocate for them and be able to find them more the ability, more houses that they could choose from.
Absolutely, and buyers have to keep in mind that when they were right, it's either time or money, right? They're paying somehow for the property, whether you want to be closer to the base, or you're going to be paying for it in the purchase price.
Correct.
Or smaller lots, or if you're going to be further away from base,
you're going to be paying it
you're
with
paying
time.
it with the commute time,
One
way or the other, and also on the level of competition.
Yes.
Everybody wants to be closer to Philly. They want to be in commuting distance of Philadelphia. So the buyers who are focusing on the communities just closer to the Philadelphia area with public water and sewer, they have higher levels of competition, right? Just take, for example, Mount Holly, the seat of Burlington County. The homes there they're going under multiple offer situations. Anything that is move-in ready, that doesn't require a whole lot of updates, flips, whatever it is.
Buyers don't want to be inconvenienced.
Right.
So it's usually those turnkey homes that people go exorbitant amounts over asking because nobody wants to live in a construction zone. It's like you call them, the grandma houses.
Oh, I love grandma houses.
As a realtor, I would go for the grandma house.
Pink bathrooms.
I would go for those houses
Absolutely,
any day.
absolutely.
The 50s kitchens.
Yes.
Yes, because the grandparents spent the money on maintaining the home.
It's
on
well
the
maintained,
stuff
it's just
that
not
you
cosmetically
can't
updated.
see.
They're just ugly.
Yeah, they're just ugly.
They're just ugly. But you know what? If it was green tile, some of the green tiles
Sorry,
in the
Grandma.
bathrooms are very, very nice. It's
Yeah, but it's also, I've been saying it, we have this HGTV
HGTV
culture.
special. Oh, yeah.
And we have
Yes.
this culture out here where, we all have in our style and what we envision. But you're absolutely right. If we can go ahead and buy this house and you're getting it under market, less competition, now you're in there. Location's everything.
Yep.
So if you go ahead and buy that house now, you can always take time and do your projects. Do that
sweat
back.
equity out of it.
Do that kitchen. And by the way, here let's talk about real quick too about the investment opportunity. If I'm a VA buyer and I'm coming into an area and I want to buy a property, what are you advising them on what they can do with that property, maybe when they get orders to leave and maybe not want to be in this area anymore?
Well, that's actually one of the reasons that we, in the buyer's consultation, we talk about the appraisal gap, because military members, 4 or 5 years, they're going to be getting orders to leave. So their two options are renting it out or selling it. When we're establishing that appraisal gap, this is the part where we talk about to our buyers, like if you're putting $20,000, $15,000 of an appraisal gap, you're basically going to be, a negative equity from the get-go. So it really has to. I'm sorry. I got like tongue-tied.
No, it's fine. It's what they're doing is they're essentially prepaying the appreciation for the market, right? When it's time for them to sell, they should be basically be prepared to break even, right? Worst case scenario, or walk away with not quite as much profit as if they hadn't done the appraisal gap.
Well, that has to do with towns too.
But that has to do with towns,
and
right?
what renovations they did. But I mean, that's something that we, as VA-friendly realtors, that we work with a lot of VAs, that's something that we have to keep front and center for those buyers, because we don't want to be in the position where we sell this buyer the house and they put a $15,000, $20,000 appraisal gap, and then they hit us up in 4 years, hey, we need you to sell our house, and then we tell them, I'm sorry, but you're actually underwater. Like, the house is just not worth what you paid for it. So that's why it's just a fine line between educating and not, going to fear-mongering territory.
Right, and that's also why I understand why buyers wants to buy the turnkey home and fully update it. It looks great, right? And we all agree that everything, the shaker style cabinets,
You're
everything,
paying top dollar.
You're paying top dollar for
right.
it.
And I always tell our buyers is, things to consider. Do you want to pay someone else's profit, or do you want to keep that profit, that appreciation for yourself?
And
when
there's
it's
no
time
wrong
for you to
answer,
sell?
by the way.
And there's
Right, there
always-
is, there is.
It all depends on their situation.
Yeah.
If they're saying, look, I'm not handy, we don't have a ton of money to spare on these things, we're barely kind of making it with our BAH, our housing allowance that you get, and we're okay paying it, financing in that profit, paying that top dollar, and then you know what, we can make that decision in 5 years. At that point, look, the market, it's a seller's market, meaning these houses are appreciating at a really good clip.
Absolutely.
So in 5 years, it's very possible they still have a profit. They make the profit, they move
substantial
on.
profit,
Or also rent continues to go up.
There's always, like, in the military community, everybody, every single day, I'm one of the admins for the JBM Dale Rentals and Sales page, and every single day somebody's asking about a rental.
Yeah.
Every single day. We're seeing bidding wars on rentals.
I have one coming up, by the way, for one of my personal.
You gotta hit me up.
I will. So, and a military renter, you can't beat it.
Yeah.
So look, that's also having the right team, mortgage, real estate, understanding.
That's also something I want to talk about too.
Yeah, go for it.
So I cannot stress enough. We were talking a little bit about lenders and Veterans United and Navy Fed, and this is something that we talk to our clients about, our buyers. I cannot stress enough how much the lender matters. And I feel like so many buyers, they don't think about the lender too much. They think about the realtor, and when I get it, we're the face of the transaction, but the lender is so important. I can't tell you how many buyers come to me with a pre-approval from like Rocket Mortgage or USAA, Veterans United, and they come to me, they're like, hey, we were working with an agent, because a lot of these agents are parts of the referral program. They pay for these lenders to recommend them.
Right.
So I can't tell you how many of them we've had, like, hey, we had a lender assigned to us by Navy Fed or Veterans United. It really wasn't a good fit. Can you help us out? And then we start submitting offers and we keep getting rejected. And then I always I tell them, talk to a local lender, be somebody that the seller's agent, the listing agent has heard of. They worked before. They know their portfolio, their reputation. They know we're going to get to closing. It's such an integral part, like the lender that you choose.
Well, and you think about it, it's human nature. So if I'm a listing agent and I have 10 offers come in, right? What do I want from my client, my seller? I just want to make sure that it's going to close as smooth as possible, on time, no hiccups.
Yeah.
Well, if they know the lender, so for me and my team, we've been local for 20 years. We know everyone. I try really, really hard never to mess up, and we have a pretty good track record to where we've earned the trust over a lot of these agents. And really, let's say there is a problem. Let's say there is a hiccup. The fact that they know they can pick up the phone, they're
Any
talking
day, weekends, holidays, evenings.
anytime, they're talking to the owner of the company. We're working together as a team to solve that problem. They know that these larger banks, the Bank of America, the USAA, so they're all the same. They're big banks, and they're not working weekends. They're bankers' hours, which is where that term came from. And they're not going to be able to feel as comfortable knowing that they're on board as opposed to a local lender, I guess.
Absolutely.
No, absolutely.
I mean, we've had offers accepted. Like, you had one not that long ago that the listing agent told you point blank that they went with the buyer because the lender.
We shared,
We shared the same lender.
We shared the same lender.
Yeah.
Maximus Mortgage Advisors. It's like we know we know the loan officer. They have a good working relationship with the same loan officer. It's like, yes, we know this deal is going to get to closing, and the seller's taking this offer because solely based off of that.
The lender,
And our offer was not the strongest offer. And that is also one. It's technically not part of the terms, but it is part of the terms.
Case in point, my listing last week in Willingboro, the top two offers were identical. They were offering the same thing. One of them was a pre-approval from Wells Fargo, and one was you guys. And guess who won? The one that was backed by you guys, because everything else was the same. So I said, look, these are my lenders. I know that they're going to be going to bat, and this is going to get done smoothly.
Well, and I understand too on the from a buyer's perspective, they're saying, well, what does it matter? I'm qualified. I'm going with whoever I choose to go with because it's my choice, and it is.
It is.
But I guess for
we just want them to save money.
Well, I also would say real estate's a very funny industry. It's hyper local.
Yep.
Yes.
And it's like anything. The people that are in it know each other.
Yes.
They trust certain people. They don't, and it's not that they don't trust the Bank of Americas and the Navy Feds and everyone for no reason. They don't trust them because they probably have been burned in the past.
Yes.
And again, when you're talking about big corporations, can't get that level of service that you would get with a smaller.
Absolutely.
That's really just the bottom line.
Yeah.
And so I would just say for any buyer watching, and they're just going, well, I mean, I want to go USAA. They're an advocate for the military. I would just say, you know what? I get that, but also they are for profit.
Absolutely.
And they're just a bank like anybody else. The one thing I do want to talk about is our Gladiator grant. And a lot of people don't realize, look, we give money to our military. We give $1,000 towards closing costs. We'll pay for appraisal. And on top of that, we're given an amazing rate. So there's benefits of going with someone like us that you probably wouldn't know about if you were just going with the bigger box.
Big
lenders.
box banks.
With the big banks, it's what most people don't realize is it's the marketing message, right? USAA, they're not really an advocate for the veteran. They're there to provide a service.
Right.
The marketing message is massaged and crafted to project an image.
Right.
Yeah.
Right. But for a local lender like Maximus Mortgage Advisors, it's the level of access, not only from the client's, the buyer's perspective, but also from the agent's perspective.
Right.
I mean, I lost count pretty much on how many times I reached out to our loan officer 11 o'clock at night
Oh,
on
he
a
always
Sunday.
picks up. He always picks up.
You know, and he picks up, he answers the questions. I'm running scenarios by him. I say, hey, listen, I'm running these numbers. Can you just double check them to make sure that the buyers are qualified? We're not walking, we're not crossing the line into a zone, into an uncomfortable zone here.
You're not going to get
back.
that with USAA.
Well, and
Not gonna get that.
we really do care, and we have skin in the game because we're a part of the community. We're welcoming these buyers into the community, and we all want to work together as a team.
Yeah.
All right, so finally, get out your crystal balls. All right, you guys. I started the show by saying you guys are the boots on the ground. I mean it. I think no matter how many times you Google it or read articles about it, nobody knows the market like the people that are living it and breathing it every single day.
Yeah.
So, Lizzie, give me the prediction this year. I don't want to go 5 years from now. I just want to talk this year. What do you think we're going to see going into 2024, the rest of 2023?
It's going to be an insane seller's market. I mean, it's literally to the point that it was during the pandemic. I mean, 20 offers for one house, and just the amounts that people are going over asking, like it's never going to appraise in a million years. It's absolutely ludicrous, but it's the reality is whoever can offer the most money is going to be the one that gets the house. People are waiving inspections left and right again. People are waiving appraisals. I'm never a big advocate for waiving inspections. I think that's very poor advice. I'm sorry, but it's our responsibility to look after our clients. So I've never felt comfortable telling my buyer to skip inspections.
No. Mike, what do you think?
I think for the first half of the year,
It was very slow.
Spring market basically sprung the last week of January. It's like somebody flipped a switch. It went from
Dead to
dead to absolute Niagara Falls in terms of offers. For the first half of the year, I think people at this point have finally realized that the rates are not ever going back down to 2 to 3%. That shock and awe has wore off. Right? They had the holidays to kind of digest and really absorb that information, and now they come to the realization, let's lock in the rates right now as low as we can, because we're seeing the economic data coming in. We're seeing the talk on the street of the Feds potentially raising interest rates again. 50 basis points, 75 basis points, whatever it is. What the Feds ultimately decide to do, and what most consumers don't realize is, again, they should definitely check out your other video on the
Current market climate.
the current market climate and interest rates.
Voice.
Yeah, the interest rates. You do a really good job explaining the effect of the Fed's decision and on the real estate mortgage rates, but the buyers want to lock in the closest rate because they're fearing that the rates are going to go up to 7, 8, potentially 9.
I mean, it's not going to be a buyer's market for a while.
It's not going to be a buyer's market for a while, but for the first half of the year, buyers need to be realistic as far as what they can afford, and understand that it is high competition out there, very much so.
So what I'm hearing is we have a lot of competition. All the things that we just talked about, it seems like that's so important. If you don't know what options you have and ammunition you have in order to get your offer accepted, you're not going to win. If you don't have the right team behind you to tell you, look, based on your financial situation and how much money you have for these appraisal gaps or how much money you have to spend in general, again, we don't want to max you out so your house poor. So if you want to be where you want to be, the good thing about a military buyer, or if you're just any buyer and you have the flexibility of going to different areas, different towns that might not be as cutthroat, might have a little bit of wiggle room there in order to get in with a less competition, that might be the key behind you finally buying a home or renting for the next several years.
Right. And
So
rent's not going down.
Now, I will say that, and just kind of end on a good note. So look, interest rates seem to be driving this market. So a lot of people are scared. I am locked in at 3%. Now, military families don't have that luxury. They're moving in here and they got to buy no matter what.
Right.
Or they got to live on housing, or they on
the base you can't fit every service member into the base.
So they're renting or whatever it is. So they want to try to make it work. So I will tell you that the good news is, as of late, and this is just over the past week, and that's how volatile this market is, mortgage rates have come down a considerable amount. They were in the mid-7s just a few weeks ago. Now they're in the mid-6s. Maybe they come down a little bit more. It all depends on inflation and how crazy our world is.
Right.
But to your point, again, you can't control any of that. All you can do is control your situation and control what options you have available to you and control the team that surrounds you. So I think in the end, guys, I welcome you so much for coming on. I mean, it's been so amazing just hearing your perspectives. These guys are one of the top teams in the region, just doing more volume that I see with amongst so many other real estate teams. So you guys are experts. I always value your opinion and your insight. Thanks so much for coming on.
Great,
Thanks for having us.
You got it. Until next time.
Till next time.